Good morning, everybody. Paul here, coming at you with a Crypto Coffee update where we peruse the news and all of the fancy events, okay, most of the relevant events, just so much information as it pertains to crypto. Just a service we try and do to get you guys the information that you may need to do your own research. And of course, we have a simultaneous sip, which is just a shared sip of coffee, tea, or water, whatever you have on hand, in solidarity, as we treat it as kind of like an effigy and a testament to try and instill a notion of grassroots, doing your own research, and integrity in a crypto space, which in turn will benefit everybody involved and those who are yet to be involved in this exciting digital revolution. So, cheers to you, dear user. Good stuff. Thank you for joining me. Let's go ahead and hop into what we have open in front of us today, which is our website, cryptide.cc. Feel free to check us out, where you will find videos such as Crypto Coffee Update, news such as everything we will be discussing today, plus more, just things I happen to stumble upon as I'm doing my own research, as you perhaps should be as well. It's what strengthens this space, as we will see today. Really relevant, awesome stuff there. And we have a blog section, which I'll actually show the next week's crypto calendar. Not too much happening. It is a bear market, but a lot of the individuals attending these conferences in turn are some of the most dedicated and knowledgeable that are left over from the voracious hype that we saw in 2017 and the early part of 2018. So you can attend those if you so choose, but now on to your featured programming. Quadriga CX owes customers $190 million. We've talked about that in the last Crypto Coffee update. You may recall the unfortunate and untimely death of the CEO of the exchange of complications of Crohn's disease. So very unfortunate there. He passed away in India, and it seems as though he had most of his affairs in order, but one of the issues that he did not end up settling before his untimely demise was the cold storage wallet for one of the largest cryptocurrency exchanges in the world. Death is a very somber thing, as Emin Gunsurer, the individual we checked out last time, very knowledgeable, wealth of knowledge, that individual. He made a fantastic point, said death should be a somber and private affair and not something to be lauded in public. However, when you're in a position such as this, it ultimately becomes anything but. So with that said, we're going to examine some of the potential implications that this may have and some of the speculation surrounding Quadriga CX, the CEO, and where this missing $190 million may well end up being. And spoiler alert, it might not be a cold wallet. So, Taylor Monahan, the CEO of MyCrypto, which is a software that allows you to interact with the Ethereum network as well as create Ethereum wallets, says that Quadriga CX may not have even had an Ethereum cold wallet, so where is that missing $150 million? Taylor, a very competent individual who is extremely familiar with the Ethereum network, was able to trawl through a plethora of transactions associated with Quadriga CX and establish that, quote, based on the actions via Shapeshift, I can only assume they were trading the ETH for BTC on Bitfinex and Poloniex as well. Regardless, these were customer funds. All three main addresses ultimately receive all customer deposits, which were then sent to a variety of exchanges. So that, for my personal opinion, raises some questions. Why would an exchange use another exchange, pay their fees to in turn transfer ETH to Bitcoin? Strange. I'm definitely not an expert on this subject in particular. However, it just struck me as interesting. Now, experts are still skeptical towards experts are still skeptical towards Quadriga CX due to the fact that they're wondering if this Ethereum and all of these tokens and coins could potentially be recovered if indeed there is some multi-signature wallets that would allow other individuals involved with the exchange to access the now frozen funds. However, there has been a high turnover rate, but strangely enough, Quadriga CX referenced multi-signature wallets in the past. So, as you may be beginning to see, there's a lot of opaqueness and confusion surrounding the situation, even though it's been a number of days since the story broke. So things are definitely still being worked out, and thanks to people like Taylor Monahan, we're beginning to get a clearer picture as to what's going on here. There are some red flags as stated, and we're not going to go into super crazy detail with this article because there's a lot more implications I wanted to jump to directly. Here's the thread from Twitter, just going straight to the horse's mouth here to get an idea as what's going on, because we always try to check our sources and check to the meat of the matter. It's a fantastic thread, chock full of information. Again, we're not going to take forever to just jump through here. Everything will be below in the description, though. So, of course, feel free to do your own research and check behind me. I found this story fascinating. Now, Crypto Medication has been another individual who has been very, very focused on establishing how these wallets are connected and where this money may be going. He's written a Medium post that was subsequently deleted, strangely enough, and is now reauthored on his blog, blog.zerononsense.com, which we can see here. It's a pretty long write-up. We're not going to go through all of it, but basically what you can see is that the big takeaway is that the exchange Quadriga CX was rerouting payments from customers to satisfy withdrawal requests from other customers on their exchange, effectively operating a shell exchange or a Ponzi. Now, this extrapolation here is particularly interesting and something that other individuals in the space have contention with. While the research itself is seemingly valid and all of it is, of course, auditable and verifiable on-chain, the implication of the exchange itself being a shell exchange or a Ponzi scheme, simply due to the rerouting of payments from some customers to other customers, doesn't necessarily mean that Quadriga CX is a Ponzi, as they may well have sufficient liquidity to cover that amount of capital being diverted. After all, apparently this is something that exchanges do semi-regularly, according to Peter Todd. Here's an excerpt, one we just looked at. Actually, I think it's the exact excerpt, saying that Quadriga CX speculation, this is what you would expect a competent exchange to do. You don't want to have to be constantly accessing cold storage, so you fulfill withdrawals from recent deposits whenever possible, with cold storage accessed only when completely necessary. Just as stated, you want to ensure that this exchange has enough liquidity to cover outstanding demand, basically what they owe their customers. However, that doesn't necessarily have to be from that exact Bitcoin. It does help to instill a notion of fungibility. A Bitcoin is a Bitcoin is a Bitcoin. And similar to banks who, at the end of the day, settle a final balance, not using serial numbers on individual bills, you can use this liquidity that is moving in and out of an exchange regularly to in turn credit users as needed. So this in and of itself is not indicative of Quadriga CX being a shell exchange or a Ponzi. However, that also doesn't dispel the potential that that may be the case. So as stated previously, there's a lot of opaqueness still surrounding the situation. This is also a fantastic thread. Peter Todd says he's literally reviewed code to achieve exactly this kind of behavior in fully regulated and compliant exchanges. Again, showing that the flexibility of the exchange system is not only tricky, but also mirrors exactly what Quadriga CX was doing in the first place. So not to say that Quadriga CX was or was not a scam, to quote Peter again, but statements like this, if widely believed, will lead to the adoption of even more dangerous practices. And this can be true. If cold wallets are consistently accessed very, very regularly, then that in turn opens them up to a greater potential for breaches. After all, remember the CoinCheck hack that saw $535 million worth of NEM tokens stolen. They were held in a hot wallet, meaning not a cold storage wallet. So that could in turn be one of the dangerous practices that exchanges end up adopting in order to avoid speculation such as it being a Ponzi scheme or a pyramid scheme, due to the fact that they're using some users' funds to pay off others. As long as they have enough liquidity in cold storage, then ultimately the fungibility of these underlying digital assets makes that a moot point. But again, that also adds to the opaqueness of the situation. So as you're probably beginning to see, some complicated stuff. And of course, here's Taylor Monahan talking to Peter Todd. Great minds think alike, and they're working together on these issues. Next up, we have another thing from Peter Todd, and I really like what he says here. Quadriga CX, I think the psychology of the situation is people kind of want this to be a scam, because then there's at least a chance that this individual can be apprehended and the money can be returned. The current explanation of lost keys is a much worse outcome with no chance of getting the funds back. And this is something that was a bit of a hard pill to swallow in a way, when you kind of would rather something be a scam rather than it being a total loss. But again, we're talking about the life of a human being and an individual who, if taken at face value, tragically passed away from a aggressive disease that, while not intrinsically dooming, nonetheless is something that plagues a percentage of the human population. And that should be something to be respected and treated with a somber sense of peacefulness. However, again, with the stipulations and the events surrounding this individual individual's alleged untimely demise, it leaves a lot to be desired. So I think this very, very succinctly sums up the situation at present. We really don't know if this is a scam or not. Many individuals in the space would prefer it to be so, given that gives them a chance to have some kind of recompense for their perceived loss. But ultimately, if that's not the case, and everything ends up being as Quadriga CX states, that's perhaps even worse for the investors, and ultimately with the loss of a human life, definitely worse for everybody involved. So, not great stuff there, but how can you help? How can individuals such as us, me included, everybody involved that's listening or checking out and watching this kind of situation unfold, what can we do as individuals? I talk all the time about crypto being a decentralized grassroots movement where we all have efficacy to interact with what capacity we have available to us. And there are tools out there to empower you as an individual and all of us to help out with this kind of stuff. Essentially doing what Taylor Monahan so meticulously did by articulating this information. It really looks like a lot. You see tons of addresses from where to where, all of this information, but there are tools for you to download this kind of stuff and in turn suss it out for yourself. So it's really not as intimidating as it initially looks. I love CER. They're a fantastic service. I'm in no way affiliated with them. However, I absolutely love the research and the work that they're doing. Here is an FAQ that talks about not only how to find an exchange's wallet, but how to find an exchange's wallet in practice, even for newbies. So I went ahead and popped open that small document, only 10 pages. I guess, like they say, it's even for newbies, super easy. And I read the entire thing, and it really is as simple as tracking down just transaction IDs and finding out who they sent the money to. And it just continues from there. All you need to have is an account on an exchange in order to start out. So I'm not going to go through this entire thing, but suffice to say that this is something that you too can do as an individual if it so interests you. If you're sitting there thinking, well, how can I use the transparency of blockchain to find out where all of this capital went? It sounds so obfuscatory despite being decentralized and intrinsically auditable. Well, there you have it. It's as easy as this. And like I said, everything will be below in the description, so you as well can peruse this information and come to your own conclusions, as is the most important thing to do. Got to jog that noggin for critical thought, folks. Ultimately, that's kind of what we're here for. So let's go ahead and check out some other information as it pertains to some of these exchanges and what activity they're up to. That was the big story for the day. Just wanted to keep you guys up to date and in the loop as to what's happening in the crypto space and with some of the drama surrounding these issues. Really hope everything works out soon. Now, Coinbase, to switch over to this this exchange stuff, is supporting PayPal with withdrawals for its customers in Europe. A lot of prepositions there. Essentially, this is something that was announced on the 14th of December of 2018. They said they were going to make a free instant USD withdrawal enabled for PayPal accounts, so you can essentially take your crypto from Coinbase and put it directly into PayPal. Meaning that if you have a Coinbase account and you have a PayPal account, you can technically use your crypto anywhere that accepts PayPal. Now, you're not going to settle the ultimate payment in crypto, but you can convert the crypto on Coinbase to USD, take the USD, send it out to PayPal, and pay whatever you want with that. Now, of course, taxes and whatever associated fees do apply. So, of course, not financial advice, and always do your own research on that kind of stuff. So, and you got to account for that, right? Back in the day, you could pretty much spend Bitcoin at places like Overstock. A lot of companies were beginning to to accept it. However, with the increase in TX fees and the block size issue, ultimately, payment applications like Stripe, they're beginning to be a bit more cautious as to whether or not they accept this kind of thing. So it's really interesting to see some workarounds, especially from huge institutions and entities in the space, such as Coinbase. This is available for anybody in the European Free Trade Association and for EU customers. Anybody who is not in the area that I just mentioned will essentially have to wait until things happen later on in the year as they begin to breach into more jurisdictions. So once again, another example of a huge entity in the space applying some unique partnerships that better serves its customers. Now, a more off-the-cuff exchange that is a little less, I guess a little less, how can you phrase this? It's a centralized exchange, but I guess the culture at Kraken is a bit more libertarian, a bit more kind of stick in the eye to government, basically. But they are compliant, and they do run concurrent with the law. And this is a very thin line to be walking, so Kraken has done a fantastic job as I see it thus far. And they have recently secured a 9-figure deal, I believe the figure was around $100 million, to acquire a crypto derivatives trading platform known as Crypto Facilities. So you heard that right. Kraken is going to allow individuals who use its exchange, assuming they have all the KYC and AML regulations and everything complied with, to trade derivative digital assets. This includes Bitcoin, Ethereum, Ripple, XRP, Litecoin, and Bitcoin Cash. And again, this comes straight from the horse's mouth, straight from Kraken. They secured the deal. They've been operating since 2013, and the London-based Crypto Facilities will offer individuals 24/7 trading on a range of crypto derivatives. So here we talk occasionally about the ETF and about derivatives and how they're involved with various financial instruments, and they're becoming more and more applicable to crypto assets as we see the space grow into a semblance of maturity. Of course, with issues such as the Quadriga CX exchange, it's a tepid maturity, but nonetheless, any growth in the regulated, transparent direction, or the fungible, in relatively secure as long as users maintain their own personal responsibility direction, both of those are, in my eyes, equally good. But let me know what you think about that. Do you think that Kraken getting involved with derivative assets may open it up to some regulatory scrutiny that may ultimately send this monolithic exchange sailing headlong into some choppy waters? Or do you think that this is the kind of thing that ultimately will show Kraken as a good actor in the space and a regulatory compliant entity? Because again, as seen here, I know this is the second time I'm referencing it. Anything can happen, guys. The crypto space is wild like that. Now, moving away from exchanges, which has been the bulk of the conversation so far, let's check out some state actors and what they're doing. I don't know if you guys go on Reddit, but Florida man. Florida's a wild state, and it seems as though a Florida judge recently overturned a ruling that Bitcoin isn't money. And it's one of those Florida-based stories, let me tell you. This guy sold Bitcoin, Michael Espinoza, sold about $1,350 worth of Bitcoin to an undercover police detective. Apparently, the undercover detective said, hey, I'm going to be using this to buy fake IDs and basically people's identities, and that complicated the case. Espinoza's defense said basically these Bitcoins, they are poker chips that people are willing to buy for you. They are a representation of value, but not themselves intrinsically money. However, because the officer stated that this was going to be used as a tool in a medium of exchange, assumingly this set a unique precedent for the court, and it turned out that it was overruled. This means that potentially law enforcement could prosecute more local Bitcoin traders if there's reasonable suspicion that they're engaging in, quote, business and not sales of, quote, private Bitcoin holdings. Now, the distinction there is going to get a little dicey, as I'm sure you can imagine, but nonetheless, I think the big takeaway here is that Bitcoin can reasonably be viewed as money in the eyes of the law. So this not only can complicate things, but as time goes on, could potentially offer more regulatory clarity in the United States, at least in the jurisdiction of Florida, which, again, states have sometimes been viewed as laboratories for democracy, so this could set a larger precedent. Only time will tell. Next up, we've talked previously on this channel about Saudi Arabian banks and the United Arab Emirates, I'm pretty sure, UAE, I always call it. So Saudi Arabia and the UAE, multiple financial institutions working together on cross-border digital currency solutions, and now we have 6 banks joining. Previously, I believe the figure was just 2, so we're seeing this partnership expand to greater heights. Here's a quote: "The currency's official issuance is conditional on the outcomes of the proof of concept stage." So, official issuance is conditional on the outcome, so they got to make sure it works first. That kind of makes sense. The Saudi Arabian Monetary Authority and the UAECB will decide on the feasibility of the currency's practical application. This is also something we've discussed previously on this channel, the idea that central bank digital currencies can either be issued in a retail application, i.e. to settle liquidity between central banks, or in a wholesale application, which means that individual retail investors on the ground can interact with the central bank digital currency. Similar to, as an example, the Federal Reserve issues a central bank digital currency. Just hypothetically, if they use this digital currency to settle payments between banks and only between banks, that would be a retail application. However, if they issue this token that is not only used to settle liquidity between banks, but is also issued in part to employees or even individuals in the general populace, that would be a wholesale issuance. So really, this is completely conditional on the currency's practical applications. I think that's the big takeaway, that and that the partnership has expanded to a greater number of banks than previously stated. So we'll keep an eye on this going forward. I've mentioned before the Middle East is a relatively untapped region. It was only late last year we saw Stellar Lumens was granted the first Sharia compliant blockchain. Religion, state, and finance are very much intertwined in the region, so it'll be interesting to see what ends up coming out of this one. Now, moving up and to the west a little bit, in between Ireland and Britain is the Isle of Man, the government executive agency, which has said that we are going to form not only a blockchain office, but also a regulatory sandbox. So really interesting stuff. What I find particularly interesting is that we mentioned previously how these small nations, which have comparatively small economic influence, they're afforded a level of flexibility due to their comparatively small size that in turn can attract larger enterprises such as this, blockchain, all these different companies associated with financial technology, that can allow these small nations to receive a disproportionate boom relative to their population thanks to that regulatory, flexibility, you could say. So essentially, they're not opening not only just a blockchain office, as said, but a regulatory sandbox, which means that they are working on developing technologically agnostic, was said in here somewhere, technologically agnostic regulation that will allow a multiplicity of various applications to try and test the waters to see to what degree they may or may not abide by other regulations in the Isle of Man, thereby meaning that they can augment some of their practices to better fit that bill so that when it comes prime time, they can launch in earnest in the country. Quote, "We're looking to attract premium blockchain businesses and the world's top exchanges to the island. We will be creating new tech agnostic regulation," there it is, "inspired by best practice that we've seen from other high-quality jurisdictions around the world." Wink, wink, Malta, checking you guys out. And wink, wink, Singapore. Singapore has had a lot of action lately. They are launching a securities token at some point. Remember, a couple Crypto Coffee updates ago, their first security token was delayed. So, seems that the Isle of Man is trying to nab some of that lunch while it is still available on the table. And next up, the 312 million in Mt. Gox cryptos were possibly sold via BitPoint on an exchange rather than over the counter, as was previously stated. Mt. Gox, huge cryptocurrency exchange, collapsed in 2013. Huge issues of settling this. The liquidity, basically. Mt. Gox was indeed insolvent, and so individuals needed recompense in some way, shape, or form, and that came in the form of not US dollars, but actual Bitcoin. So fast forward to today, or rather in 2017, when these individuals received their crypto, their Bitcoin, it was worth a lot more than it was back in the day. So that's good for them. They needed to get some kind of recompense for the suffering that was accrued by this centralized entity that ultimately received its comeuppance in court. However, this did lead to some issues as to whether or not these now newly enriched individuals who can now get a hold of their Bitcoin after all these years would potentially crash the market by liquidating all of their holdings or even some of their holdings on open exchanges. Now, some individuals seek to pacify some of the worries by saying, hey, we're not going to impact the price too badly. Of course, huge volumes, even if they're over the counter, will eventually impact the psychological mechanism of price discovery when that information becomes more apparent. However, it seems as though some individuals didn't do that and actually used exchanges, which can have a much more immediate and real impact, not only on liquidity and order books, but on the psychological effect of price discovery. As stated, over the counter takes more time to kind of seep into the zeitgeist. And unless Bitcoin is being really generous, we'd wager the reason they're depositing billions of Japanese yen into a trustee's bank account is because they were hired to sell the Mt. Gox Estates Bitcoin/BCH. So this is mostly just speculation. Again, unless Bitcoin is being really generous, it's really at this time indeterminate. However, interesting to speculate, It's been a number of years since these individuals have even had the chance to sell crypto that was on the Mt. Gox exchange. So kind of a period of crypto history coming to a close flows, of course, in true crypto fashion, not without some semblance of drama remaining. With that said, I believe that's all the information we have to cover here today. Thanks so much for watching, guys. As always, it is my pleasure to be able to talk with you all, share information with you all, and ruminate about some of the happenings in crypto and their potential implications. Leave me a comment below. Let me know what you think of this kind of content, or feel free to join the Discord. Always good conversation going on there. But for now, my name is Paul. We are Cryptide, and remember, the tide is rising, as is hopefully the pace at which some of these Mt. Gox-esque issues can get settled. Hey, cheers, guys.